Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Just because we're kind of hitting like a pretty big event window, both like stock specific with like some like kind of interesting earnings. There's a lot of bios expected to have data soon. Also, we're entering a really kind of like critical stretch in terms of like economic events, right? With some coming up this week, today actually with Powell, but also like the CPI and FOMC day later in December. So I mean, I'm sure if you listen to these videos, then you know that I like focusing on events with options, but I really want to like reiterate this and stress this as we get into like this period where it's going to be busier for events, is that the risk is higher, right? With greater expected movement comes higher option pricing, right? And when option pricing is higher, if the movement ends up disappointing, aka if these stocks or if the market doesn't move what the options are pricing in, there's a potential to lose a lot of premium. So whatever money you lay out could take like a much greater hit than you would typically see on like a standard swing trade. So um, for me, like these are things that I'm aware of going in, right? So if I were to play like Snowflake for earnings, right, with options pricing in almost like an 18 to 19 point move, if it doesn't move a lot, then the premium is really going to get sucked out of short-term contracts. Another one I'm looking at, Goss, has upcoming phase two data release, biotech. Options are pricing in about like an 80% move on the underlying stock. So if the data is mixed and the stock doesn't move, those options are going to see a huge implied volatility crunch, right? Premiums are going to drastically come down. So when you're playing options on events, yeah, like the prospect of catching like a really big trade on a huge move is always there, but also the prospect of losing almost all, if not all of your premium is also there too. So you got to be mindful of the size you're taking and the risk you're comfortable with, right? So when I'm playing events, I realize that because my risk is higher, I want my reward to also be higher. So I really want to make sure, especially if I'm doing spreads, that I'm taking that into account, right? Like, whereas for swing trades, I most of the time assume that I can get out before the options go to zero. That's not always the case, but I assume most of the time I can. With event trades, I don't have that same assumption. Like I'd love to be able to recover some premium, but sometimes if I'm leaning long and the stock drops big, or if I'm leaning short and the stock rallies huge, those options could open the next day at zero, and there's no chance to get your money back. So when you're playing events, I just really want to reiterate this, that you really need to be mindful of how much money you're risking and also like your size, right? Because even though you think you might have a good handle on what the stock is going to do, there's no certainties, and sometimes it just doesn't play out the way you expect, and options can really take a big hit. So just it's going to be busy and there's going to be a lot of movement, but I also want to reiterate at the same time that you really need to be mindful of your risk. Okay. If you like this video and you're looking for more information about trading events or earnings with options, please follow up with the link in the description of the video for more information on options to play. Have a great night, stay well, and I will talk to you all tomorrow.